for Thursday, September 3rd, 2015. Euro dollar. So while the euro remains locked within the middle of a recent range between 117.15, that high that we saw the other week, and 108.09, the 20th of July low, the overall downtrend remains intact, and a lower top is potentially now sought out at 117.15 ahead of a bearish resumption below 108.09. At this point, though, in the short term, key levels to watch above and below are the high that we saw going back to Tuesday, the high that we saw at which came in at 113.33, and the recent low that we saw going back to last week, which came in around 11.56. At this point, a break above or below will be required for clearer directional insight on a short-term basis, but again, rallies ultimately are expected to be well capped in favor of a resumption of declines back down below 11.55 and towards 108.09. Sterling dollar. So cable remains under pressure after breaking down below the 200-day moving average, and this market is now focused on a retest of that low that we saw, that key low, going back to the 1st of June at 151.70, below which it goes and shows down to the 150 psychological barrier. At this point, we need to see a break back above 155 to take the immediate pressure off the downside in this market. Dollar yen. So although dollar yen has been putting in a bit of a recovery over the past couple of sessions, while the market holds below 121.74, there's a risk for a lower top now in favor of a resumption of declines back down towards that recent extreme low that we saw the other week at 116.12. At this point, only a break back above 121.74 or a close back above 121.74 would take the immediate pressure off the downside. Euro Swiss. So Euro Swiss continues to look quite constructive, with the market now focused on a higher low at 107.14 ahead of the next upside extension beyond 109.62 through 110 psychological barriers and towards that 115 area further up. At this point, only a close back below 107.14 would delay the constructive outlook for Euro Swiss. Aussie dollar. So Aussie is broken down to fresh multi-year lows in recent trade this week, and the market is now poised for a fresh downside extension towards a measured move objective, which comes in around the 68.30 area. Any rallies with the market is oversold, so we could see some rallies, but any rallies are viewed as corrective, and only a break back above 74.40 would take the immediate pressure off the downside in Aussie dollar. Dollar CAD. So dollar CAD continues to remain quite constructive, and the market could be putting in a higher low now ahead of the next major upside extension beyond the recent 11-year peak at 33.54 and towards psychological barriers at 135 further up. At this point, only a break back below 128.60, that low that we saw going back to the 29th of July, would compromise the bullish outlook. Kiwi dollar. So Kiwi remains locked within a downtrend, and the market has been consolidating off those recent spike lows that we saw, that drop that we saw, that sharp decline last week at 61.30 to a fresh multi-year low. But overall, again, the downtrend is intact, and any rally should be very well capped in favor of a resumption of declines below 61.30 and into the 50s further down. Only back above 67.40 at this point would compromise the bearish outlook for Kiwi dollar. SPX 500. So the S&P 500 has been showing signs of a major top over the past several weeks, and the market looks like it could be poised for additional weakness, with a potential lower top now sought out around 2,000 in favor of fresh downside extension below 1,800. At this point, only a daily close back above 2,000 would take the pressure off the downside. Gold. So although gold has seen some consolidation in recent trade and maybe some mild setbacks, the market overall continues to show impressive recovery out from that recent multi-year low below 1,100. At this point, a higher low is sought out just above 1,100 in favor of the next upside extension beyond 1,170 and towards medium-term resistance at 1,233 further up. Really, only a close back below 1,100 would compromise the recovery outlook for the gold market.